PR Somasundaram joins us, Managing Director with World Gold Council India. Good morning. Thank you for joining us. Gold prices have gone higher. Indians have sold. It's never happened in the past. Normally, rising prices, they always attract buyers to accumulate and purchase more. How come Ganga ulti beh rahi hai?
No, actually, there are two sets of people. People will continue to buy, and we'll see why they have bought less. And when prices go up, there is a general trend that people do try to cash in. And when you mix it with the fall in the sentiment and some parts of the rural areas getting affected because of low wages or whatever, certainly this trend is to be expected. And this is not just an Indian phenomenon. We have seen it globally as well. The recycling has really gone up by 10% because people do tend to take advantage of high prices to exit gold. And they will wait for a lower price to buy, or they may have other reasons to do so. But buying has been very, very muted, as you mentioned in your show at the beginning of it. And that certainly requires some debate.
See prices, as well correcting further on the back of this. And have you ever seen this kind of decline in demand before?
No, we have seen it in 2016, but there were specific reasons for it. In the quarter two of 2016, there was a jeweler strike following introduction of excise duty. And you saw jewelers completely shut shop for nearly 45 days. And that quarter was one of the lowest, actually, quarter two. But this is the next lowest quarter in the last 15 years. Certainly, the jump in price, as you mentioned, have put off people, because generally when prices go up, people would want to wait and watch. Is it a secular increase or is it a blip? So when it went up in quarter three, towards a later half of quarter two and sharply in quarter three, obviously people held back their buying. During Diwali, what we have gathered anecdotally is that people have come, the inquiries are higher, but it will take some time before people get adjusted to this new normal, because it's a very, very sharp jump. The last time we saw was in 2013, when prices actually dropped by 28%. And then you saw what happened. The demand jumped across the globe, and then you had all the things in India about 80-20 and other stuff that followed because the demand went up. But this level of price increase, a very sharp increase in a very short time, we are seeing it for the first time now.
Do you think the sharp increase has led to gold liquidation, A? And B, has gold really lost its sheen at the housewife level? Because the narrative which I get from my wife, my mother, my relatives, my aunts, is that they are no longer buying gold to park their savings. They are no longer considering giving gold on their daughter's or their sister's marriage.
Well, it's a millennial trend. We see that in India and China. If you see China's gold industry, the jewelry industry has adapted itself to this new trend quite admirably. They are bringing a lot of innovative things like 3D gold and 5G gold. And we saw, even though China's market also, the demand dropped, we saw quite a lot of sales happening in these kind of new age products, which are lightweight and more innovative. Obviously, India hasn't, stepped up on that front. We still work out on the fact that the lady will come and buy heavy jewelry. Although the organized players are attempting to do quite a lot, but China is certainly ahead of that. Coming back to your question, yes, we see that millennials certainly have other choices now. Holidays, experiences is globally now becoming a more important expenditure for millennials than buying these material stuff like a gold or even a car. So, whether this, and we are seeing this now in the last few years, whether this is a a phase in their life, because we see people even in research that about 35 they do tend to come back to gold. Maybe this is therefore a phase in their life and they wouldn't want to look at gold, but maybe they would come back at 35. The other important thing is whenever the price remains turns attractive. For instance, if there is a 2,000 rupee drop in the Indian price because of duty reduction or whatever, rupee strengthening, you will see that there is a lot of buying here, because it's not just the rich people who probably have other choices. It's about the middle class, people who are actually moving into the middle class, and that's a very large number. If you're talking about 200 million people joining the middle class in the next 5 years, 1 gram per person means a 200 ton of latent demand there. So we need to look at the Indian market slightly differently. Yes, there will be people who would have probably moved out of gold into equities, but there are lots of people who still haven't had access to gold. Our per capita, despite our very large consumption, is one of the lowest.
So does that mean, though, that, like I was asking you earlier, that the overall price of gold will come down, because we're not yet, seeing that impact of, the cooling demand? If you're saying that structurally, perhaps the demand or component for gold, or the kind of demographic that's perhaps looking at it or will increasingly, look at it is changing. Do you also see any changes to price going forward?
You see, the price impact of physical demand of India and China on the price is very, very insignificant in the short run. It is the other way, actually. Price is determined more by global factors, and particularly US interest rates, because COMEX and ETFs, they determine the price. Demand follows. If the price comes down, demand goes up. If the price goes up, demand comes down. Of course, over a long period of time, you need physical demand to support the price. There is no doubt about it. But in the very short run, a variation in demand is not going to have any impact on the price. It's more determined by the US interest rates at the moment and the other global anxieties which drive investors. We have seen this quarter as well. ETF inflows have been one of the highest, 258 tons, both in Europe and in US. Driven by, as I said, factors other than the physical demand scenario here. So that is what drives the price and not so much what happens in India or China on the physical demand front.
What we're trying to gauge, Mr. Somasundaram, is whether structurally gold is in a problem because of this change that you said, especially in millennials in India and China and across the world. Theoretically, is gold going to head down because demand is easing out?
Well, those are not the trends we are picking up. Let's, as I said, even some of our research says that, the moment, how people, women touch 35 and above, they do tend to come back to gold because they see it as a very good diversification tool. And so that is, but as you said, this has to be tested, and we always keep working with the market players to see how this trend plays out. At the moment, I don't think there is such a big concern. Yes, millennials are now attracted by, as I said, other stuff, particularly experiences, not so much owning an asset. That certainly is a trend. How much of this plays out in their middle age has to be seen. Coming back to gold, what you are saying is women going out of jewelry, particularly the heavy jewelry. Yeah, parts of it, as I said, particularly for those who have already had their mothers and others buying gold, might be a trend. But would it be the same trend for people who are entering the middle class? Now, we must admit that there's quite a large section of people who will become first-time gold buyers as the prosperity increase. We have done an econometric analysis last year. What we found is gold demand in India is more influenced by income than any other factors. By that, what we mean is a long-term increase of 1% in income leads to an increase of 1% in demand. But increase of 1% in price leads to a drop of 0.5% in demand. So that shows that the income has a greater influence on long-term demand because of our, as I said, lots of people entering middle class, whatever it is. So this means that as India gets more prosperous and our per capita increases, you will see the latent demand for gold from sections who haven't had access coming back in a big way. But whether people who have already stocked up quite a lot on gold, whether they move on to other experiences, yes, that would certainly happen. But you also have a lot of people who haven't had access to gold who will enter the market. So in a sense, gold is therefore protected because quite a lot haven't had access to gold. That is also the reason why you see things like digital gold today. You see quite a lot of people actually buying into these kind of things. So maybe they may not buy the jewelry, they may buy more of financial products on gold, which is again good for the economy as well, because that's the government's initiative. But you will not see people moving away from gold. At the end of the day, it is a very, very good asset class. It is inversely connected with the other asset classes. It will always remain in fashion.
Car companies are saying we are getting hit because of the millennial trend and there is an Uber moment for car companies. Do you think it's too early to say that there is a millennial moment in gold prices and jewelry demands will plummet? Do you think we are not there? I mean, this could be a seasonal downtick, but yes, jewelry demand and gold demand will come back.
Yeah, very, very certainly it will come back. And as I said, even the long term, if you look at it, some of the people who already have jewelry might move to other forms. If we have gold-based financial products, they will become more fashionable. They might hold gold with banks. When banks are allowed to open gold deposit accounts, they will go into other gold-denominated financial products. They may not really have physical jewelry at home because they have enough of it, but you will not. Because of gold's properties and because it is so liquid, because it has, it also improves the portfolio returns, you will see that there is a lot more, a lot other ways by which people hold gold than just jewelry. That trend certainly we will see. But whether people will move away from gold, that is, it's a little, what I would say, we don't buy into that argument at all. We see the trends and we also see how when they give up jewelry, they still come back in other forms. Like in China, if you see ETF this quarter, gold ETFs have seen the highest growth. Again, in China, ETF is a new phenomenon. We see the high growth. So we don't think that people will move away from gold completely, but they will probably hold gold differently. And that presents an opportunity even for us, the monetization scheme or whatever you may talk. If banks start offering innovative products based on gold, you will see that probably youngsters will come to that. And the banks can then use that gold as well. It's not in the household vault. It is with the bank and they can put it to use.
All right, sir, appreciate your time. Thank you for joining us and thank you for being so candid in terms of why and where the gold demand is actually headed.